We can proceed then. So thank you very much for joining our class. My name is Mr. Dennis. I'll be taking you through audit and assurance. So under audit and assurance, the first topic is called assurance and non-assurance engagement. So this is what we're going to look at now. We have assurance and non-assurance engagement. I'm not sure if the light is not very good. Let me check. Okay, great. Now we can proceed. So we have assurance and non-assurance engagement. We have assurance, and non-assurance engagement. So the first one, under assurance engagement, what are the examples of assurance engagement, or what is the definition of assurance engagement? So assurance engagement is an engagement where you are expected to give conclusion. You are expected to give conclusion or opinion after the report, or you can say in the report. So at the end of the engagement, you're expected to give a conclusion or an opinion. That is assurance engagement. And then, of course, non-assurance engagement, no opinion is expected. Okay, so those are the two major differences that we need to understand, so that there is no opinion expected. So which are this kind of assurance engagement? What are the current kind of assurance engagement? Examples of assurance engagement that you can look at. Examples of assurance engagement. One of them, the first one, we can talk about audit of historical, financial statement. Number two, we have system assessment. Number three, we have compliance assessment or compliance audit. We also have number four, we have PFI, that is prospective financial information. Okay, thank you very much. Now, in this particular assignments or this particular engagements, you are expected to give a conclusion or opinion at the end of the process. You have to actually increase or raise the confidence of the users of financial information, because they want to know that from what is happening after your evaluation, what is your opinion? Are things okay? Are they in order? So that is why we are saying that you need to give a conclusion in your report. You have to give a report that has conclusion or opinion. Let's look at examples of non-assurance engagement. Examples of non-assurance engagement. So these are the ones that we don't expect any conclusion, right? So example of these, we have compilation report. We have agreed upon procedure. We have number three, we can also have bookkeeping or accountancy services. We also have tax advisory services, tax return services. So in these three, you only come as a practitioner, you only come and do your work and go. There is nothing that you're expected to give like an opinion. right? So you are not expected to give any opinion in this particular assignment. So let's look at the elements. What can you use to differentiate between the two? How can you differentiate between the two engagements? So that one, we call it elements of assurance engagement. So you can say, I hope you can see here, elements of assurance engagement. These are elements or characteristics or features. What can show you that this one is assurance engagement and this one is not an assurance engagement? So the first one is that we have three-party relationship. And this three-party we have, the first one is practitioner. Of course, we are saying that in assurance engagement, there are things that must be there. Number one, we must have three-party. And in most cases, we have the three parties as follows. The first one is actually the practitioner, who is the auditor, is the person who is performing the audit work. Then the second person is the responsible party. This is the person who is being audited. So this one, we also call him the management. We call them the management. Then we have number three, we have the user of the information. Though in some cases, you might find that the management are the users of the information. Because for example, if you are actually auditing a shop where the owner is the sole proprietor, is the accountant or the director in charge, and is also the owner, is the one who wants to use the report to evaluate how it's doing, then of course, in that case, we have the user sent to the responsible party. Now let's look at some of the users. In example, they can ask you, who are the users of financial information? If you are asked to talk about the users, we have number one, we have government. Because they need the report, they want to use the report, for example, if it is audit report, they want to use the audit report to evaluate how they are doing, to evaluate how the economy is doing, so that they can actually formulate economic policies. Then number two, we have regulators. Number three, we have competitors. We also have suppliers. In fact, let me just put them like this. We have that. We also have that. We have this. We have suppliers. We have customers. We have employees. They also need to know the report. We have investors. So these are examples of people that are actually interested in the financial statements so that they can, or the information from audited account, so that they can be able to make certain decisions that are very important. Let's look at the second element. So in exam, they can actually ask you for the features or elements of assurance engagement. And now this is the first one. Let's look at number two. Number two, we have, sorry, about that. Number two, we have subject matter. On subject matter, we are saying that the subject matter should be appropriate. This is the item being audited. Item being investigated or audited, investigated. We are saying that the subject matter should always be appropriate and identifiable. You can't audit something that you cannot identify. You can't audit something that is not appropriately identified or can be appropriately recognized. So it needs to be identifiable. Okay. So the second one, we have suitable criteria. So the criteria should always be suitable. It should not be biased. No bias. No biasness. The criteria is the standard. This is the standard. This is the standard. Or sometimes you can call it benchmark. Used to evaluate the subject matter. So we talk about subject matter, right? This one here. So you have to have a certain criteria that you're using to compare what you are seeing here and what the criteria says. So this could be a standard. It could be the standards that we have from regulators or government requirements. Like for example, if it is KRA, then there is a standard that you should use to file your return. There's a way you should be able to calculate the VAT and PAYE. Now, if you're not following the standard, that particular standard that you're using is now what we are saying here. That standard should be applicable equally to every business in the same industry. That's why we are saying it should not be biased. There should not be biasness. And of course, you're using it to compare with this. So if you have the standard here, this is the standard, then we have the subject matter. So you should be able to compare, and if there is any variances, then now as an auditor, you note them down as part of your finding. And now, that particular variance that we're talking about should be documented so that we can see that I have evidence. And so that brings us to the third element, which is now evidence. Evidence, because once you've seen there is differences between the standard, once you've seen there is differences between the standard, which is the criteria, and the subject matter, the item that you're investigating, you should be able to derive some evidence from it and actually use it as part of the report that you're going to give, because every report that you're going to give must be supported. So it has to be supported by an evidence. That is number 4. We need to have sufficient and appropriate evidence. So the keyword here is evidence. When we talk about sufficiency, we are talking about sufficiency in terms of the quantity. But this one we're talking about appropriateness in terms of quality. Of course, something that is appropriate should be reliable, meaning that you can actually rely on those evidence. And in this one, we're talking about the significance, or in terms of the impact. Yeah. So when we're talking about sufficiency, or we're talking about the quantity, we're talking about the amount. If you can talk about the significance, you know, or materiality. That's the best word, materiality. How material is it in terms of the evidence that you're getting? How material is the evidence? Is it something that can actually support your opinion? That even if you have a board meeting, you can always table, and it makes sense. It actually deserves the board's members' time to sit and actually watch or listen to what you're giving, because it is tangible. That is what we mean by materiality. So we don't want a situation where when you're collecting evidence, you can actually pick something that is small, like maybe 1,000 shilling is lost. Then you now come that the financial statements are okay, the bank and bank balances are okay, except 1,000 that disappeared that cannot be accounted for. So the whole year, only 1,000 is lost. That is actually immaterial. So that is not sufficient evidence. An evidence that actually has an impact that can actually be tabled or used as an evidence should be having either in terms of the frequency or in terms of the magnitude, in terms of the lump sum amount that you're talking about. Probably, let's say that you have seen there is a loss of maybe 100,000. This makes sense because of the magnitude. Even if it is lump sum amount, it is a one-off amount, but the quantity is higher. Probably, if you are to talk about 1,000, then this should be more. You are seeing that 1,000 happened in January, disappeared. In February, another 1,000 disappeared. So we are saying if the first 3 months we have lost almost 3,000, that probably means that if this trend goes on, then the company is going to lose because it has become a current. And so everything that has started like that, though it is small amount, it will one day blow out and the company might lose a lot of money. So that's why it is very important that we look at materiality in terms of the frequency and in terms of the amount, if it is one-off amount. But then in the example, you can ask you, what evidence can you consider to be a reliable evidence? Which evidence is reliable? Because we talk about reliability. How do we know that it's reliable? So that actually brings us to another stage that we need to look at, where they can always set exam. But before I go there, let me give you the last and the fifth elements of assurance engagement. We say that you need to give a report and conclusion. And so the fifth one is called conclusion. That is basically the last The last elements, let me look at the characters of a good evidence. So the fifth one is a report or conclusion. You cannot do audit without giving report. When it is verbal, but you need to give it in writing. You always need to give it in writing. So the fifth one is called report. And when we talk about report, this is basically conclusion, which can have evidence. It can be, for example, if it is audit, then you are ready to state the matters that you got or you found. So we call them management report. And of course, we also have our management letter report. Then we have financial statement report. So these are the two types of reports that you expect to give when you are doing audit. But for other services like maybe the system, you're only going to give your review or probably a report that relates to the finding, but you're not going to give financial statement report. But for audit, we need to give two reports. The first one is called management letter report. This management letter report has the points that contains the finding that you're able to get during your process of auditing. But then the statement, the financial statement report shows the financial results and how the accounts have been performing in terms of money. Of course, here this is where you're going to give audit opinion. Audit opinion. It has opinion page, audit opinion. So that's basically the last one. So we say that in assurance engagement, you have to give a conclusion, and in audit opinion, you're going to give conclusion. So this makes sense that it actually qualifies an assurance, an audit report or audit assignment as part of the assurance engagement. Even system audit is also one of assurance engagement where you're going to actually give a report. Let's now look at the qualities of a reliable. What are some of the features of a reliable evidence? What makes an evidence reliable? Reliable evidence. So one of the things that must happen so that we can always say that this particular evidence is reliable is that number one, that evidence should have been actually derived or gotten from the original document. For example, if you want to give me an evidence that you have motor vehicle, you need to show me the original logbook. The same to land, we need the original title deed. So the evidence that I'm getting should not be from a photocopy, because photocopy could mean that actually you sold the book, the car, and got a copy. You remained with a copy, but sold the car and even transferred the original logbook. So if you give me evidence, it has to be an original copy, original document. Number two, an evidence that is collected through observation by the auditor himself. Observation, or we can say direct observation, by the auditor, or we can say practitioner. That's a good evidence. Another good evidence is the one that is documented. Documented evidence, meaning that it is actually put down in writing. Documented evidence. For example, if you want to be a witness, you should put that particular one in writing. Everything that is important in life is normally put down using pen and paper. Things like, for example, sale agreement, marriage certificates, you sign, you have to put them in writing. So that's what we're saying. A good evidence must be evidenced through documents that actually can be traced, documented, right? So today, for example, if you have a girlfriend or a wife, but you've not gotten married, there is no documentation, that is not your wife. Actually, when you go to court, that actually cannot stand before the law, because you can't go there and defend yourself verbally, saying that this is my wife, but you don't have any document. You have to put it down. That is why anything that you are actually feeling that is important must always be written down. Remember that. Then we have the fourth one, evidence that actually generated by the auditor through system where internal controls are strong. So evidence generated by an auditor or practitioner from the client's system where, especially where internal control system are strong. And that is also a good evidence. Evidence that the auditor himself is able to generate from the client system. You take computer, as an auditor, you take the client's computer, you log into the system, print that particular evidence or generate it or get it within the system. Where we have considered internal controls to be too strong, that evidence that you get from the system can actually be considered as a good evidence. Those ones are actually the best evidence. So these ones are actually reliable evidence. So in exam, you can actually be asked about the same. It's very important that you should be able to defend yourself by giving such kind of evidences. Let's look at past paper where maybe we have the same. I have a number of past paper here. Now, for advanced level, for intermediate level, we have a past paper questions that came. We have a past paper question that came in 20. This one is May 2019. We have May 2019. May 2019. Past paper reference. Past paper reference May 2019. So May 2019, we had a question that was asking that the finance director of Kijani Industries, I'm repeating, the finance director of Kijani Industries has requested your firm to undertake an audit assurance engagement later in the year. Remember, you have been requested to undertake an audit assurance engagement later in the year. Part of your team includes an audit assistant who has not been involved in such assignment before and has asked you to explain what an assurance engagement involves. The question is, explain three key elements of an assurance engagement. 3 key elements of an assurance engagement, only 3. So the first one we talked about, suitable subject matter. So in this particular question, that was May 2019, question number 2B. Question number 2B. They were talking about key elements, 3 key elements. Explain 3 key elements of assurance. Engagement. So the first one, we talked about suitable subject matter. We have to have subject matter, suitable subject matter. That one must be there. Number 2, you remember we talked about 3-party relationship. Then number 3, we have to talk about the criteria. And when we talk about criteria, we're not just talking about any other criteria. We are talking about suitable criteria. We also have evidence, and we say that we need to have sufficient. And appropriate evidence. So those are already 4, and they only ask for 3. Then you explain. Now, that is a question that was set in May 2019. We also have another one. We also have another question in May 2018. May 2018. May 2018. Just question number 4C. Question number 4C. It is saying distinguish between assurance engagement and non-assurance engagement. That is the question. It is asking distinguish between assurance engagement and non-assurance engagement. So basically, in this particular question, they want you to show the differences. And we know that the first one is in terms of the definition. Under assurance engagement, a practitioner is expected to express conclusion at the end of the audit process, or probably at the end of the engagement. You need to express a conclusion. And on the other side, we are not expected to express any conclusion. And of course, the reason for expressing conclusion is to be able to raise the confidence of the users of the financial information. So you need to express conclusion or an opinion to be able to raise the level of confidence of the users. That's the first differences. Okay, so the second one is that in the other one, we are not expected to have evidence in case you need to explain further. We have given the first differences that under assurance, you're expected to give conclusion to raise the level of confidence of the users. Under non-assurance, you're not expected to give any evidence for the same. That is the first difference. Number two, the second difference is that in terms of the evidence. Under non-assurance engagement, you don't need to attach any evidence. You don't, as a reporter, you're not expected to give any evidence. So that is the second differences. The third, probably, we can say that you don't need to have a three-party relationship in non-assurance engagement. This engagement, for example, bookkeeping. The employee will come and tell you to keep for him the book and the contract is over. So nobody wants to use this particular information again, like the one we're talking about, the government. They don't care about how you kept the book. The government, they don't care. They don't want that particular report in the system, right? Competitors are not interested in that, but they are expected to actually use information on assurance engagement because they'll be able to know, for example, in audit, they'll be able to know how you are performing, the challenges that you have, maybe, and also the opinion, the performance for the year, the audit opinion. Those are examples of questions that have been set, and they are that easy. Maybe I can look at the last one, another year that they are set under this particular. In 2017, this was November 2017. November 2017. Just question number. November 2017, question number 1. Question number 1, November 2017. So Anna, in November 2017, question number 1, they're asking, auditors carry out various audit assignments. Auditors carry out various audit assignments. In relation to the above statement, explain 4 non-assurance assignments that auditors can undertake. So they want you to explain 4 non-assurance engagement or non-assurance assignments. And so that is basically what we covered today. We have looked at examples of non-assurance engagement. So they want you to look at these examples of non-assurance engagement. So the first one, we talked about agreed upon procedure. So in this particular one, it's just like an audit, but you have to agree. There is an agreement between the users of the information, that is the client. It's an agreement between the client and the auditor. So the client and the auditor agrees on the procedures of performing that particular engagement. That is why it is called agreed upon procedures. The client and the auditor agrees. For example, you want to make audit report or something like looks like audited account for the purpose of maybe meeting certain requirements, maybe for contract. And so you are not using the ISA standard that is expected. You are not using the ISA standard, but you're using the standard that has been agreed upon by the client. The client explains to you how he wants the books to appear. In that particular one, it is not assurance engagement. You can't give confidential, you can't raise the level of confidence or give any opinion because you didn't follow the ISA standard that are required in normal audit. So in that particular one, you are just going to do it the way client wants it, but you are not expected to take responsibility by giving a conclusion or saying that you are sure because you didn't use the right standard, right? So that's the one. It's called agreed upon procedure. Agreed upon procedure. Next one, compilation report. Or we can say compilation engagement. This is where the client probably has the audited account. They have, sorry, not audited account, but the client has kept the book well. But now the client is asking you to come and just help him draft the account to look like audited drafted account, like the one that we have on audited reports. So you are coming to compile the report so that you can be able to see P and L items and also balance sheet item, the balance sheet item. That is what basically you're coming to do for the client. He doesn't know how to compile those reports to look neat so that he can even look, make his own opinion from it. So you're coming to do that. You're not actually doing audit. You are only compiling, you are only arranging the report to look neat and presentable. That is compilation report. Then we have the next one, income tax, preparation on income tax returns. We talked about tax, so we can say preparation of income tax returns. This again, you come and prepare returns and then you go your way. You are not expected to give any conclusion in that particular engagement. We also have another one, bookkeeping. We have bookkeeping. Bookkeeping also falls under this one. This is the normal accountancy job that we normally do. It's called bookkeeping. Then we have also management advisory services and maybe consulting, management advisory services. And consulting and consulting. This is why you become consultants. You're going to advise managements on things that they can do, but you're not giving advisory services. Okay, so that is example. Then the last one that I can also explain to you or give you is November 2017. November 2017, question number 5. We also have another one, November 2017, question number 5. November 2017, question number 5. B, question number 5B. This is the last one, and they are saying explain the following terms: reasonable assurance, and we also have opinion shopping. Those ones we can do in our normal classes, so subscribe so that we can be able to move together. Our number for class is 0726839808. Yes, my name is Mr. Renis. You call me to that number and you'll find me 0726839808. We have all classes going on and feel most welcome. Thank you very much. See you in our normal classes.